Number 5. Know when to exit. The nature of any business is to rise and fall. Even Jeff Bezos said that he expects Amazon one day to fail. The world is constantly changing. Just because a certain company has dominated an industry today doesn't mean it's going to stay there forever, so you have to know when to sell your stocks. Should you sell just because the stock increased by 10 or 20%? Should you exit and realize your gains? Not really. As soon as you realize that one of the companies in your portfolio is overrated and its stock price is growing without any relation to its true value, then it's better to sell before it crashes. Warren Buffett invested $500 million in PetroChina when it had a valuation of $30 billion and wasn't popular yet. The stock price surged a few years later when oil prices rose. First, it crossed $100 billion, then $200, then $300, and crossed $1 trillion valuation. But Warren Buffett sold his stake when the company crossed a valuation of $275 billion. Many have criticized him for selling too early, but Warren Buffett did the right thing. Since the stock price was rising for no intrinsic reasons, it was overvalued and would crash at any moment. Unlike every other investor, Warren Buffett didn't know when that crash will happen, so he sold his stake. The stock price of course crashed once it crossed the $1 trillion mark and is now traded at just $112 billion. You don't have to follow each of your stocks every single day, but you have to keep in mind that whenever one of the companies that you have invested in dramatically rises for no real reasons, then it's better to sell before it crashes.